Okay, so again, since we missed our class connect yesterday, I just wanted to go over the upcoming assignments with you guys. This is part 1 of your recording transactions in a general journal assignment. So some of the new things you're going to see in this assignment, we've been working with T accounts, so now we're going to transfer those T accounts over into a general journal. And another thing you'll see here is that they gave you some account numbers to work with, but we're not really going to mess with account numbers right now, but you are going to refer to this list of accounts for naming of your accounts. Okay, so this ought to help you out a lot, because we talked about how you don't just name it asset or liability or owner's equity. They come with actual names. Okay, so cash account is going to be an asset account. Accounts receivable is another asset account. Same with supplies and equipment. Accounts payable is a liability account. Capital stock, owner's equity, retained earnings. Okay, so and then you have your revenue account and your expenses. So always refer, if you're not sure what to name an account, refer to that list, and that can often help you out. And they also give you a lot of clues within the transaction. So, okay, so the first transaction on January 25th, this is the one I have done for you on your assignment paper. So the very first step we're going to do is analyze the transaction. We always want to name the accounts that were affected in the transaction. So in this case, it's capital stock and our cash. All right, then we want to look at what type of account each of these are. So our capital stock is an owner's equity account. Our cash is an asset account. Okay, then we want to determine which is going to increase, maybe if they both are, and if they are, by how much. So in this initial investment, both capital stock and cash are going to increase by $50,000. Okay, so that's step 1, is to just kind of break everything down. Step 2, we want to look at our debit-credit rule. So an increase in cash, which is an asset account, is going to be recorded as a debit. Okay, so then we're going to debit our cash account for $50,000. An increase in capital stock, which is an owner's equity account, is recorded as a credit. So credit, we're going to credit capital stock for $50,000. Okay, that's step 2, just determining debit and credit. So another thing new with this assignment is you're going to have to tell me whether or not your debit and credit sides will increase or decrease your account. Okay, I used to tell you that for you, but now you have to start making that decision on your own. So then we are going to, like we said in our analysis, increase our debit by $50,000. So we type that in there. We increase our capital stock by $50,000, which is a credit. So now the new part is we're going to copy that information over into a general journal. Okay, this is eventually we get to skip the T account part altogether, but that's just kind of the breaking down. It's just breaking it down for you so that you can copy it over into the general journal. Okay, then eventually we'll take it out of the general journal and put it into your ledger. But first we need to put these in our journal. So we want to start with the date. So we saw that on January 15th this transaction was happening. With description, you always put the account name that you're working with. Okay, and you always want to list your debited account first. Okay, just get in that routine to make it easy for you and keep it consistent. List your debit account first and your debit amount. Okay, then we're going to list our credited account next on the following line, along with our credited amount. Okay, and you'll notice this little indent here before we listed our credited account. That just, again, it's kind of another visual for you to separate these two accounts and see that you have two listed here, and kind of like it's set up over here with debit on the left, credit on the right. We kind of have our cash name over here to the left more, and our credited over to the right more. Okay, so that's transaction 1. Pretty simple stuff, huh? We're just copying information from our T accounts to our general journal. Okay, let's look at the second transaction together. So on January 15th or 17th, we paid $400 office rent for the remainder of January. Okay, so let's analyze this. The accounts that are affected include this would be affecting our cash account, and our rent expenses is what we have listed from our list. See down here I have prepaid rent. I think your curriculum kind of messed up there, so whichever one you want to put, that's fine. Actually, I'll go ahead and keep this prepaid rent because we described it as an asset account down here later on. So we have prepaid rent or rent expenses, and our cash accounts are being affected here. Then we're going to list these as both asset accounts. So cash and prepaid rent are asset accounts. And then we have prepaid rent, type, is increasing by $400. We're taking that out of our cash account. It's going to decrease by $400. Okay, an increase in our asset is always recorded as a debit. So we're going to debit our, sorry, I cannot type today. Debit our prepaid rent account. Then a decrease in assets is always recorded as a credit. So we're going to credit our cash account. Okay, so then we move down here to our T accounts. We have our cash here. We're going to credit, we said, our cash account, but first let's put in our increase and decrease signals. So in an asset account, our debit is always our increase, credit's our decrease. This is another asset account, so we're increasing and decreasing here. Decreasing cash for $400, and we're increasing prepaid rent by $400. Okay, so then we move down to our journal here, put in our date, January 17th. We always want to list our debit first, so I'm going to put prepaid rent here. I'm going to debit it for $400. And I want to indent a little for my credit, which is my cash. And we're crediting this account for $400. And that's all there is to it. A couple of you have already asked me about this post reference column. Your posting reference refers to, like, normally you would list the account number that you're working with. So then when you go to copy this information into your ledger, you can just kind of double check to make sure that you're referencing it correctly. Guys, I don't want you to worry about this today, okay? We might get into that a little more later, but right now I just want you to focus on copying your T account transactions into your general ledger, or your general journal, excuse me, okay? So we're going from T account to general journal, and then in part 2 of this assignment, well, actually in the part 2 assignment just kind of adds on documentation, which we'll get to when we go over that next part 2. But then the following assignment that you have for Friday, which we'll go over here as well, that's where we're copying the information from our general journal. We're going to copy it into the general ledger and then over into a trial balance. So we'll worry about all that stuff when we get to it, but right now this is kind of the gist of this assignment. We're copying from our T accounts to our general journal, and remember to always refer back to this list of accounts for account names. And that's all there is to it. Let me know if you have any questions.